Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy. Today we're breaking down one of the biggest announcements in income ETF world. Something that has a lot of retirees and income-focused investors asking one thing. How is the ULTY, the 1-for-10 reverse split, going to affect my income? If you hold ULTY from YieldMax, or if you're thinking about it, this is a critical video for you. You do not want to miss. And before we dive into a quick shout out to all of our Patreon members and all our YouTube subscribers. You are all amazing. If you're not subscribed yet, hit that button, hit that bell notification, hit that subscribe button. It's free. You'll never miss one of our income breakdowns. Let's get into today's video. Important disclaimer, this video is for educational and entertainment purposes only. The information provided should not be considered financial advice. Past performance does not guarantee future results. Professional advice, always contact a licensed financial professional for personal situations. And educational purposes, this content is provided for education and inform, not invest or withdraw funds. I am not a financial advisor. I am just giving you information that I have found that works in my portfolio. So what is happening with ULTY? Well, YieldMax announces a 1-for-10 reverse split. It's a significant change in ULTY's share structure effective November 28th of 2025. The share count reduction, the shares will be reduced by 90%. That means for every 10 shares you own, you will reissue one new share. So that's 100 shares down to, 1,000 shares down to 100 shares. The price adjustment will increase the price by 10%. So that $4.16 share price as of today, November 16th, 2025, it would be $41.60 when the split takes place. Now, the total value is unchanged. You will still have the same exact value that you did before the split and then after the split. But now, right after that, everything has changed. This is not a dividend cut. There is not a fee change. There's not a new strategy. Everything's the same. Remember this. This is not a new strategy, so they have fixed nothing. There's nothing new. There's nothing been fixed. So the reason for the split, this is the notice that went out. I'll have this down in the description below if you want to read the fine print. I'll give you the stuff. The Board of Trustees has approved the reverse split that was issued on ULTY. It will go in effect on November 28th is the effective date, which means it will follow the next trading day will be December 1st, because that November 28th, how crazy is it going to sound, is actually Black Friday. It is Black Friday. It will come out right after Thanksgiving, and December 1st, we will trade at the new price. So everything I just said to you is right here in the legal document that came out from YieldMax, so you can go ahead and read that completely. So again, reverse split mechanics. So before the split, you have 1,000 shares, and the price of the shares are $4.16. So what they're doing is that reverse split. They're going to take 10 shares and give you one new share. So if you have 1,000 shares, you're going to give up your 1,000 shares. You're going to get 100 shares back, and the value of your shares is just going to go up. So basically, it's going up 10 times. So $4.16 goes to $41.60. So but your value stays the same, $41.60 versus $41.60. Now, this is just a mathematical change. I want everyone to understand this clearly. This is just a mathematical change. Nothing else has changed. They're just going to reset the price, reduce the number of shares, and reset what's going on. So let's take a look at the ULTY 1-year picture. The first thing you remember back in March that they made this big announcement, they were already starting to have some drop off. They were losing that NAV erosion, and they announced in March, it makes a dividend change and a strategy change. Everyone jumped on board. Everyone talked about it. And you can see after this, for a good, rest of March, all of April, they had some positive growth. It made dividend changes. It went from monthly to weekly, which is what excited people. And then they talked about this great strategy change that they were making. Then they moved into that May through September. The market was stable. Their plan was stable. Their plan was working. Everything was doing good. Then we hit that September, October timeframe, and it basically shows in a stable times that the strategy actually worked. Okay. Then we get into the last 30 days. This is from October 15th to March 13th. You can see this thing is down 22.32%. Assets under management went from a record 3.35 billion all the way down to 1.7 billion, almost 50% loss. But the fund has struggled to recover. And this fund always has, it struggles to try to fix and to regain itself because of the covered calls. It is not built for growth. It's built for income, and it cannot get itself out of its way for it to grow. The underlying stocks have to do so much growth to get this to move a little bit. Things I call major pullbacks or market pressures is really what's driving this thing across the board. So here's what I run into and what I'm afraid of. They're going to change this fund over to be a $42 fee because they're doing 10 times what the current price is. And if they haven't changed any of the strategies and they haven't changed any of the working criteria of ULTY, in my opinion, and this is only my opinion, that it's reasonable to question whether outcome will change if the strategy stays the same. So are we really going to see any change in this fund? Are we just going to go from $40 down to $20? Are we going to just see them continue to buy things and lose money? I don't know. And no one really knows, but if you don't change, one thing I've always learned in my life, if you don't change, don't expect something different. And that's what I see here. So why does all this really matter? Well, reverse splits are not about income. They're about price stability and market perception. When a fund's price falls below $5, it faces structural issues and it indirectly affects your retirement income. Prices below $5 price point shows low liquidity, high volatility, screening issues, and declining investor confidence. How does this help retirees? Well, a reverse split resets the price to a healthier level, improving the fund's liquidity, the market perception, and structural health. Your income stream has a better chance of staying stable. I would believe with all of that how this would help retirees. But they haven't changed anything. They haven't changed their strategy. So this is really a mathematical problem. I don't see this helping retirees. I don't see this reverse split helping in any way at all. I really see this thing going to continue to struggle unless they change their strategy. Will my distributions go down? A reverse split does not automatically reduce your distributions. The distribution policy goes unchanged. The fund distribution policy remains the same. Income is based on NAV, option premiums, and market conditions, not share count. So the total value preserved, your total dollar value stays the same, just fewer shares paying a higher per share amount. So again, if you're before the split, you have 1,000 shares and it paid 9 cents per share. After the split, you'll have 100 shares and it'll pay 90 cents per share. The last dividend was 6 cents with no return of capital. So this might represent a short-term stabilization point for assets under management, but there's no guarantee that's the outflow that's over. Okay, so you got to add this to it. It may be a saving grace for them, or it may not be. Will the split fix the NAV erosion? The reality of NAV erosion, ULTY faces what we call NAV drift due to selling options on many underlying stocks. The reverse split does not fix NAV erosion. It's just a temporary reset. And let me say that one more time. A reverse split does not fix NAV erosion. Strategy changes NAV erosion. Operations changes NAV erosions. Management changes NAV erosions, but not just reverse split. The split buys time to keep the ETF active and functioning so that you can make those strategy changes. We should all be looking at this as a reset button, not a repair tool, but a reset button. Let's reset back to the past times where the price is probably over $40. And then let's work at that point. What controls NAV long term? Well, it's the underlying stock movement. So as underlying stocks increase or decrease, that's going to change the NAV. Option premiums availability. If you don't have the volatility that creates the option put and call options, then you're not going to have that availability. Volatility patterns, the fund design and management. Those are the key factors of NAV of a product. And of course, overall market conditions. So if you don't change anything, you can't expect anything else to change. So as we talked earlier, when this fund was doing stable, holding its own, was in a bull market. It was in a strong market. Now, with this change, will it maintain? Most likely, yes, in a strong market. Will it grow? Probably not, because the strategy is designed not for growth, but for income. So this whole thing, it relies to is one simple pattern, and that is the fund design and the management team. They need to make their changes. Look at the allocations that they have. Okay, they're 40% technology, 23% financial, 15% other. Look at the funds that they're into in the technology. Robinhood. Okay, they're into Palantir, the Coinbase. Coinbase has been hitting hard. That's a terrible one. Right now, coin has been in major downward trends. HIMs, we showed that. HIMs have been way off. So what we're looking at is the picking of funds, I think, was trying to pick things to help try to recover, like Robinhood would try to recover, but they all have been hit realistically, the past week, which I think is what's triggered it. It did not recover what they want. Nothing is changing in the holdings. They have made no announcements that they're changing their holdings in any way. So again, if you don't change your holdings, if you don't change what your structure is, you're not fixing the NAV erosion. You're not going to fix your problem. So 5 focused realities. Volatility perception. Okay, a $30 stock drops 50 cents feels different from a $3 stock dropping 5 cents. Okay, buying flexibility. Higher price per share means you need larger blocks of capital. Portfolio, going from thousands of shares to hundreds feels emotional, but value remains the same. Variable income. Option-based ETFs don't guarantee payouts. Distributions are week to week, month to month, and are subject to market conditions. Strategy matters. If ULT is a small part of your diversified income plan, you're likely going to be fine. If ULT is your largest income generator, you need to reassess your assets and your risk exposure. These are realities, guys. These are the things that we need to talk about. And I think this last one was the important one. Strategy. And I'll say it again. If ULT is a small part of your diversified income plan, you're probably okay. You may want to look at it. If ULT is the largest part of your generator, then you need to reassess your risk exposure and realize that this is not going to change. We're doing the same thing over and over. A lot of stuff that they've done is try to create a positive. It's try to create a positive scenario that's out there, that they're recovering. 3 months down the road, who will remember that we had this huge reset? How many of us remember that we had in March, we had a reset? If we don't continue to tell people this, I've seen many YouTube videos that people were talking about. Oh, you got to remember that the strategy changed. The strategy changed back in March. And I hope those same people are going to be saying the same thing. Remember the reverse split. Remember that first reverse split 8 months later. Let's take a look at the pros and cons. The good. Let's start with your income. Your income isn't directly reduced by the split itself. The policy and mechanics don't automatically cut distributions. Through future payouts can always change from market conditions. The structural strength. In theory, the split can make the fund look structurally stronger and healthier on paper by boosting the share price and tightening liquidity. But it doesn't automatically fix the underlying issues. The bad, the market context, often follows long-term downtrends. The NAV erosion is still, risk remains unchanged. And the emotional impact, fewer shares, can also feel very unsettling. The truth of the fund, the split itself is not the enemy. The true effects of ULT movement, market volatility, options premium levels, and fund management decisions, those are the real problems. You have to understand the fund is not designed to increase in value. This fund is designed to generate income. And understanding that this fund is primarily designed for income, not long-term price appreciation, and historically has struggled with NAV growth, none of it's been fixed. So what do we do next? Let's get out of the negative, and what do we do next? What direction do we go? Now, this is 100% your choice. This is just my input, my personal take on everything. Post-split distribution amount, track the changes in the distribution, the frequency and the amount. Are they going to continue doing weekly? What is the amount? Are we going from 6 cents to 5 cents to 4 cents? We already know the base number right now is about 6 cents and there's no ROC. The NAV behavior, monitor over the next 3 to 6 months for stabilization. I could be all wrong. Watch it over the next 3 to 6 months. See if it stabilizes. One of the biggest things I've talked about on our channel, changes in assets under management. Watch it for inflows and outflows. If we start seeing assets under management growing, That means people are stepping back into the fund and they're starting to do more with it. If you continue to see the drop-offs, then you know your distributions are still way too high. And the volatility cycle. Monitor for shifts in the stock market. So what can we do now? Well, it's a simple options that you have. You can sell out now as there's no difference in waiting. I mean, nothing's changing. Like I said, you're just going to have less shares come December 1st. You'll have less shares worth the same amount of money. You can wait for market corrections, understanding that this fund is not designed to increase its value. Okay, you can wait for that. You can collect distributions to try to balance out your losses, because that part should not really change that much. But it's all in what's in your portfolio. It's all in what's in your decisions. No one can tell you what to do or not to do. I am not giving advice. I am not a financial advisor. I am not giving you anything of that. I'm just throwing the options on the table for you to make your own decisions. So the key takeaways, the 1-for-10 ULTY split does not directly reduce your income, but remember it's an evaluation for your risks. Rebalance your portfolio. This is a prime time right now to rebalance your portfolio. Use this as an opportunity to look at your asset allocations and maintain diversification. Reconfirm your income plan. Double check that your retirement income strategy is still aligned with your goals. Hey, we were all chasing the big returns that were out there. I did it. We all did it. But now take a look at, does it really fit your goals? Check your diversification. Ensure that no single ETF carries, your entire retirement future. I've preached and preached and preached on this one and said that you won't have anything more than 5% in any one of these high-risk funds. Monitor ULTY movement. Since ULT is an options income strategy, watch their movements, see what they do. It's the smart retirement investor approach. Okay? You're always watching what you're doing. Guys, I hope this was a helpful thing. Let me know in the comments below. Tell me what you guys think, where it's going from here, and we'll catch you next time.